mywealth.com. I'm Bob O'Brien, the head instructor with the courses. Welcome to the blog for the day. Consumer confidence, home prices, and Ben Bernanke. Had a good few things going on yesterday in regards to the markets and so forth. Essentially, consumer confidence was a good report. Home price, Case-Shiller was up, which is slightly, which is a good thing, showing stability. And we also had President Obama renominate Ben Bernanke as the Fed Chairman-Chief for a second term. So, essentially things are definitely looking better. I mean, we've almost made the turn from a bull market where we've gone from news that's less bad than it was before to news that's getting pretty good. And, there's still a lot of things going on and still a lot of things to be concerned about. But overall, considering it's right around a year ago, I think we're coming up on the anniversary of that weekend where Lehman went bankrupt and AIG had all its problems where it wasn't allowed to go bankrupt because it was so big and so forth. So if you put things in perspective of where we've come in a real year, there's definitely reason to be optimistic in terms of our policymakers, some of the decisions that they've made. But there are still a lot of questions to be answered about the stock market and the economy and where we're headed.
Be certain to check out the written blog at www.mywealth.com/blog. Got a lot of great links for you in there, and of course the question of the week, so you don't want to miss that. Okay, is a double dip recession certain? Now, considering the fact that we're not officially out of the current recession that we're in, it's really a moot question, but things are definitely looking better. A lot of the reports coming out have been positive about the economy. A lot of that's priced into the market already, but there's definitely a real concern about a double dip recession. Now, conventional wisdom would say yes, there will be a double dip recession. Essentially, this time last year, when you had Lehman Brothers and AIG and so forth, I mean, really policymakers would have made this deal in a second to say avoid a depression and have, two recessions. But here we are today where, it does look like, we're coming out. That the global economy, not just the U.S. economy, global economy is recovering. And a double dip recession really could happen as fast as market forces pushing up long-term rates on inflation concerns while we're already in a housing market that's shown signs of stabilizing, but yet still really, really weak. And loss of the $8,000 home credit in a couple of months and so forth. You could see, that trend stop or flatline and so forth. And there you have your double dip recession right there. But Bernanke is really the man to watch. He's the one with his, finger on the button in terms of interest rates, concerns about inflation and so forth. And, it comes as no surprise that, he's going to get his second term as a Fed chairman. And he's been very creative. And that's another thing I think you don't want to underestimate, his creativity. There's definitely a new normal, a new economy and so forth. And some of the Fed tools have definitely become extinct. So it's going to be interesting to see what he does. And you also you don't want to just assume that there's going to be higher interest rates used as to cool off an economy that gets too hot too quickly. The Democrats still have a supermajority in Washington, and they could use tax increases to cool off an economy that is getting too hot too fast. These are the type of things we like to go through in our courses, and of course you'll be able to ask us questions. So don't wait, get educated, take control of your investing. Get to www.mywealth.com.
These are definitely interesting times in terms of the economy, the markets, the global economy. There's definitely a new normal. And I realize, a lot of people feel like they've, been left behind over the last, 10, 15, maybe 20 years in terms of their personal economics. But you need to make certain that you understand we're in a global economy and that things are changing and that the U.S. markets are not as influential as they used to be. So you definitely want to make certain that you take our courses, perhaps our currency course, where you can see that and you can realize, what are really the forces that are moving things. The courses are very affordable. Our Investing 101 course, $99. Currency course, $99. And of course, our stock trading course, $149, and ETF trading course, $199. So you definitely want to check out these courses. My name is Bob O'Brien. I look forward to seeing you in a course, and have a great day.